Today's January 30th, 2026. This is a little idea I had. Watch some of it, watch none of it, watch the clips, whatever. But it's an idea I had is I get the benefit of talking to so many people in the real estate industry that I've scheduled over the next coming weeks to talk to different people because it's just been weird. It's just been weird out there. And it's been weird out there for a while. It's been weird out there for a while in the business, from NAR to home stagnating to people taking things off the market, delisting, just stuff that's going on. So we're just going to talk about what's going on out there and shop and make it real informal. So today we have Curtis Hurst with us, very experienced realtor up here in the region, serving Apple Valley, Victorville, Hesperia, Silver Lakes, Rancho Cucamonga. You and I have had deals in Long Beach,
Riverside.
We've had Riverside. So yeah, I'm going to have. And when I talk about realtors, I deal with lots of realtors, a lot of quality realtors, and different realtors have different skill sets. And I have a lot of realtors that can really stick their face in the fan when we have some hard situations. And I think Christina Vanderpool sticks her face in the fan. Allison Flatt will stick her face in the fan. And you and I, we've done some pretty tough deals.
We've had some fun ones for sure.
I mean, you've gotten in it.
Yes, a couple of them.
And so I think that's also something I think people would get some good perspective on too.
Yeah, it's always fun to go down and get somebody out of a house who's figured out that it's time for them to stay forever and not pay anybody. So that's fun stuff.
Right. And so the first thing is the market feels like I don't know the data you guys know, but when I'm driving home, I'm driving past the same signs, sitting there over and over and over. But yet when I read the reports, houses are selling. What's going on there? It doesn't feel the same.
There's a whole lot going on there right now. You have houses sitting on the market for an extended period of time because they're not priced correctly. Everybody's watched what's gone on since 2020 through 2022 when the market went completely crazy. The numbers went wacky. Homes are priced high. So everybody who's selling now is trying to get the maximum they can. So a lot of times we're seeing homes priced way too high. That's one of the things that's happening there. The other is, on the other side of the market, things are starting to stabilize a little bit. So we're going back almost to what was normal days on market when we had a normal market prior to COVID. 70, 80, 90 days on the market was not unusual for a home back in those days. So there's a lot of factors that we're seeing there. And then, of course, interest rates, buyers, what's going on there. And then all the craziness in the economy and employment that's got consumer confidence is really a little weird right now. Nobody wants to jump in because they don't know what's going to go on.
What days on market was a lot lower, wasn't it? It was a lot lower in 21, 22.
Yes. Yeah. 21, 22, you could put a house on the market, have a bidding war, and be off the market in 7 or 8 days.
Got it.
That with the interest rate change, that slowed way down. And again, we're actually back almost to what was normal prior to that COVID rush.
Got it. And sometimes I'm looking at these houses, and I see what they paid for it. Mm-hmm. And this expectation is do people express that to you? Like I saw a house the other day, okay? I saw what they paid in 2017, and I see what they've got it listed for here in 2026, and it's almost 100% more. And I think to myself, it's only been 8 years. Like 10% per year appreciation? I mean, is that realistic? Is that what people think? Or
that was real in 21 and 22. People were paying whatever because they had all that COVID money in their pocket. So they would pay whatever was out there. They would go compete, they would go bid, and they would pay that. Unfortunately, it's artificially inflated. It is what it is. We're seeing the market stabilize price-wise. We've been pretty flat for the last year. So we're seeing that stabilize. Will it ever return back to where they should be value-wise? Probably not. But if we see the rates come down, if the government buys another $200 billion in bonds to push our mortgage rates down a little bit more, that will help a lot, getting more and more buyers back in the game because their dollar is worth more.
Got it. And And what about the sellers? Are they going to just try to increase the price, or do you think they'll feel lucky to get what they've been asking?
That's going to be a lot on their realtor side. Sellers are always going to want to price it high. Let's see what we get. Why would I price it low and see what happens? That's not the best strategy in our current market. The best strategy in our current market is to price it right at where it should be, not a little above, or maybe even just a little bit below, and see if you can't get 4 or 5 offers, get that bidding war happening again. Create that demand because you're priced at or below the market. Nobody's going to say, why is it below? They're going to jump in there. Their inspector's going to do that. Their realtor's going to fix those things for them. That's where it's at.
All right. I want you to rank this.
Sure.
See if you can rank this for me. And we'll let, most is easiest to sell, most desirable, easiest to sell, to least easiest, but to sell. But these are different kinds of houses that I'm starting to see out there. So okay. I think all these things might be desirable, but let's see if you can rank them and what you think's going to sell it the fastest.
Okay.
All right. A, RV garage.
Okay.
B, ADU.
Okay.
And C, on the lake.
ADU, I would say, is going to be first. On the lake, second. RV garage, third. ADU, because the additional cost or value there is offset. You can either rent it out, put a family member in it, offset bills, costs, etc. On the lake is always a luxury. We all want it. Those are priced pretty aggressively, and it's a luxury. The RV garage, not everybody has the big RV or has the need for it. You can always put it on the side of your house, unless that RV garage has an ADU on the second floor, in which case I'd swap that around into first.
Got it. Got it. All right. Now, which one of these is the biggest deal killer? Okay. In need of repair with seller having no money, tenant in possession, or, well, let's just do those two. In need of repair and seller has no money, or tenant in possession. Which one's a bigger killer?
Tenant in possession. The seller has no money is an easy fix. We have lots of contractors that will work on contingency, get it into escrow, they'll come in and do the work, they'll take payment at close out of seller's proceeds. So that's an easy fix. Tenant in possession, if the tenant chooses not to leave, you know what a nightmare that is. Now you're 6-7 months out.
People will buy it with tenant in possession, right?
If it's cash flowing like it should be, yes. Otherwise, they may want to take possession when it's vacant, and that with a tenant, if it's a good tenant, easy, 30 days, you're out, whatever the case may be. If it's a bad tenant and it's trouble, now you're talking unlawful detainer, you're talking 6 months and $6,000 or $7,000 in money that the seller may not have.
Got it. And I know that you represent some buyers that are investors who buy troubled properties.
Yes.
And my understanding is when we've worked together that you've always counseled sellers like, hey, this is an investor, what you can get right now from an investor, and this is a market price if you do X, Y, Z, right?
Yeah.
What's the discount? What do you think the discount is between as is, where is right now, and is it cost of repair and 20%? What is the discount that the investor wants? An investor
typically, and I've got a property, for example, right now that I've got listed in its current condition for $310,000. I have investor offers at $250,000, as is, where is. They'll take all of the remaining property that's in there out, and they'll take care of everything else. On a retail basis, it's as is also at $310,000. If it was fully rehabbed, it'd probably be a $400,000 property. So the discount can be almost as much as 100%. I mean, it's huge in some, or 50%. In some cases, it's huge. But the cash investor is always looking to figure out how they're going to get their profit out of it. So they're going to come in, and if you have a property that you need to move, maybe it's a probate, you got dumped with a property that you don't know what to do with, you don't have the time or the energy to go through the whole process, maybe an investor offers the best way to do it. Grab some cash, move on quickly. Holding out and fixing things and doing that may be the best bet if it's a property that you want to hold on to or maximize your return. Just depends on what the motivation is for the sellers.
Yeah, I hear you. And so out there right now, I mean, what's the biggest concern of sellers, why they're not listing?
The biggest reason sellers aren't listing, there's two actually. One is they've got a 2.75 or 3% interest rate, and why would they want to change that? The other side of that is they want more for their property than it may be worth when you sit down and tell them comps say that your property is worth $350,000, and they're going to look at you and they're going to say, I want $475 because I put a pool in and I spent all this money on flooring and the kitchen upgrade, than the reality of what the comps say it's worth.
I tell you, you got my blood pressure up, and they say that I have high blood pressure now, but I mean, when people say my interest rate, that drives me nuts, Curtis. That's the only thing you can control throughout the term of the loan. You can make your interest rate whatever you want.
Correct.
I don't understand the interest rate. When the people tell me the interest rate, it makes me bonkers. Do they understand if they make extra principal payments, it drives their effective interest rate down?
Most people do not. That is an education that people are getting. I mean, right now it's difficult, and trying to explain to a buyer, and there are so many programs out there right now that buyers can use. People are even going back to adjustable rate mortgages because they can get that lower interest rate for a year or two, and then maybe refi as the market changes. We're seeing all those things happen. But yeah, that's a huge argument, and nobody's telling them, put another $100 a month against principal and see what happens.
My friend, who's a banker forever, and he's been doing the adjustable rate mortgage forever. And I am a product of my environment. My father, who lived through the late 70s, early 80s, and just beat it into my head that you should never have an adjustable rate mortgage. Oh my gosh, it could skyrocket, yada, yada, yada. However, in my experience, I mean, I was 8 years old, 6 years old, 7 years old when this has happened. In my experience, interest rates have not moved more than within 3-4% my entire life. And he has outperformed me with me and my fixed rate mortgages for my entire life, be them commercial, be them residential. He has kicked my tail in interest expense. So I am tempted on the next commercial project to definitely think about adjustable, because the premium I've paid for fixed rate mortgages and the fact that for the last 20 years, I mean, they've almost only come down.
Sure, and just take a look at the expense right up front the first year. If you come down 2 points on an adjustable versus what you're putting towards principal, just in the first 2 years alone, you're saving a fortune.
It's like almost like, you take some responsibility for the rate. It's not the bank's job to set the rate. It's your job to set the rate. Take some responsibility for the rate. Yeah. But man, and I have these conversations. Some of these conversations last forever with clients, and
sure,
at the end of it, they just smile at me and they're like, "You are the dumbest person I know. I am never going to listen to this talk again."
Yeah, but nobody understands that an adjustable rate mortgage cannot go through the roof. They're anchored. The contract is very specific. They can only go so much, so often, period, end of story. Not like the old ones back in the day, like your dad was talking about, where you could go from a 1%, in 3 years you could be 9%. You had no idea what was going to happen. Now those adjustable rate mortgages are regulated, they're specific, they're not like that at all anymore.
Got it, yeah. So NAR, we're 12, 16, 18 months into NAR.
Yeah.
I know how I feel NAR's done, the settlement. NAR, yeah. What's your opinion on the NAR settlement? Has it made any difference at all?
Nothing whatsoever. I talk with clients every day, whether they're selling or buying, and we go through the process of explaining now. You have to say, as a buyer, you're not guaranteed that the seller is going to pay your commissions. And when you're talking to a buyer, you're looking at the buyer and you're saying, hey, look, there's no guarantee the seller is going to pay your commissions. We're going to try real hard, but there's no guarantee. The reality is the sellers are paying the commissions, and here's why. When you go out and you put a house on the market, the first thing a buyer's agent calls you and asks you is, can I go show the house, and are you paying commission? Now, if I say no, they may not show the house. We want to get them into the house. So the right answer to that when they call with that, by the way, is, you know what, with the right offer, the seller is going to look at everything and every opportunity. So please come take a look at it. But the reality is sellers are still paying commission more often than not.
The court found that sellers don't pay commission in that settlement that they signed.
Well, don't get me started on NAR and what they do with my money and how they spend it. But so there's that.
I said, in my life, I've never seen. Oh, man. So, all right. Well, 2026, we're a month in.
Yep.
I don't know what happened. I haven't gotten any of the reports from any of the brokerages yet, but 2026, have you seen anything? Too soon to tell what's going to happen?
It's early, but on a personal level, with me and my team, we are seeing a lot of activity, far more than we did in January of 2025. We're seeing buyers coming off the fence. We're seeing sellers breaking loose and putting houses on the market. Sellers are actually listening now when you sit down and you bring a CMA, comparative market analysis, when you bring that to them and say, the market says your house is worth $500,000, David, not the $750,000 you want. They're listening now. They're not going, well, screw it, I'm not going to do anything. Now they're starting to listen. Sellers are starting to move based on family and other needs, not necessarily tied into an interest rate. So we're starting to see that come off. Rates being down a little bit. Again, the Fed buying that $200 billion in bonds, that certainly helped push the rates down a little bit. That little blip on the downside helped a lot with consumer confidence, and that's a big thing for home buyers.
Yeah, it's the confidence in the rate. It's not the rate itself. It's
Correct.
the confidence in the rate. You know, the Market Timer Hall of Fame is empty, and the fact that me or anybody else, for that matter, thinks that they can arbitrage interest rates is lunacy. If you love the house and you like and you want to buy it and you can afford it, which, gosh, Lord knows the banks will let you take a payment you can't afford in a heartbeat.
All day long.
If you think you can afford it, you can swing it, then gosh, it's where you live, man.
Sure.
That's pretty good. Maybe we pass on the Disney passes this year.
Yeah, and there's a saying out there, it's marry the house, date the rate, because the rate's the only thing you can change. Once you buy the house, the purchase price is there. It is what it is. Now you can go back and refinance every six months to a year and change the rate, as long as you're smart. Don't do a cash out refinance. Refinance to a lower rate, get your payment manageable, and pay a little extra towards your principal. Be smart.
And the buyers are coming in different shapes and sizes.
Absolutely.
You know, hopefully, we'll see.
Yeah, it's going to be an interesting year. I think it's going to be a very positive year. We're going to see some significant growth in the real estate industry in general. Home prices are going to stay pretty flat, in my opinion, for what that's worth. And with the rates coming down, we're going to see a little more activity.
I mean, the volume couldn't get less.
No, absolutely not. It's been desolate.
Yeah, and I just saw an article in CNBC that they said they had more cancellations nationwide in December than in measured history. People just dropping out, and that could be dropping out not because they got cold feet. It could be dropping out for a number of reasons, right? Like I couldn't get the loan, I couldn't get the repairs,
insurance.
Couldn't get homeowners insurance. So there's a lot of things that are outside of people's control in an escrow. So,
absolutely.
Yeah. Well, I appreciate you stopping by. We're going to be doing this in the next coming weeks, and I just want to share the perspective that I get when you guys refer people in here, or you guys are calling me, and I get to pick your guys' brains about like what's really going on out there. Because by the time I see it, it's a mess. But you guys are seeing it every day, and something I miss about my last life was when I was close to the line and close to real people and close to the consumer. I had my finger on the pulse, and so that's what I'm hoping to do with these videos, at least.
Good, and I think depending upon who your guests are, I'm sure that's going to help a lot as far as getting your finger back on the pulse.
Yeah. So, all right.
Right on.
Thanks for coming by.
Thanks, David. Appreciate it.